On the daily chart, I've highlighted the recent price action, encased by a Fibonacci sequence, which shows that price has retraced almost 50% level, which is 537.45 in the last 5 trading sessions, falling from 564.20 all the way down to today's closing price of 540.36, falling 4.2%. Failure to hold this level would increase the odds of a 61.8% Fibonacci test at the 530.79 level. Should price stabilize at the 50% Fibonacci level, the odds increase of a retest of the confluence of the 38.2% Fibonacci level at 543, a close above that level, and odds also increase the likelihood of a test of 549. On the downside, should price close below 537, then the likelihood increases of a retest of the confluence of the 61.8% Fibonacci near 530.86. A close below 530 imply a move down to the next support at an unfilled gap at 518.78. Starting off, the S&P 500 has retraced approximately 50% from its recent high of 564.20, falling sharply over the past 5 trading sessions to today's close at 540.36. That's a 4.2% drop. And as we look at the Fibonacci retracement levels, we can see that today's close rests just above the 50% retracement at 537.45, a critical support zone that we need to pay close attention to. We've seen a sharp retracement of 4.2% as price dropped from 564.20 to today's close at 540.36, testing the 50% Fibonacci retracement level at 537.45. If price holds here, we could see a retest of the 38.2% Fibonacci level near 543 and potentially a push to 549. On the downside, failure to hold above 537 increases the probability of testing the 61.8% Fibonacci level at 530.86. Below 530, the next target would be the unfilled gap at 518.78, which could signal deeper downside risk. Now here's where things get interesting. If the market stabilizes and holds above this 50% level, the odds increase that we could see a rebound towards the 38.2% Fibonacci level at around 543. A close above 543 opens the door to the next resistance at 549, and the A break above that level sets up the 555 level for the retest, which also aligns with the moving averages we've been watching. But if price fails to hold 537 and closes below this level, we're likely looking at a deeper retracement to the 61.8% Fibonacci level near 530.79. A close below 530 could lead to a further drop toward an unfilled gap at 518.78, representing a significant area of support. Today's candlestick, a bit of a doji, shows indecision in the market, likely a reflection of traders digesting this recent sell-off and figuring out the next move. Volume, although not extreme, has been steady and matches the market's hesitance. If we see increasing volume on a break below the 537 level, that could add confirmation for further downside. So, traders, this is a key moment for the S&P 500. Watch for how price reacts around these Fibonacci levels. Do we get a bullish bounce to retest the 543 zone? Or are we on the brink of a deeper correction to the unfilled gap? And now for my take on this setup. I've drawn the recent price action encased by a Fibonacci sequence, showing that price has retraced almost 50% in the last 5 trading sessions. Failure to hold this level could easily lead to testing the 61.8% Fibonacci near 530.86. On the flip side, if we bounce here, the first upside target is the confluence of the 38.2% Fibonacci level at 543, with the next test at 549. I'm also eyeing a potential support at 518.78 if we lose the 530 level. So that's the game plan. Keep these levels on your charts and watch the price action carefully. If you enjoyed this analysis, don't forget to hit the like button and subscribe for more real-time trading insights. Let me know in the comments what your outlook is for the S&P 500.